Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. Stock market snaps 7-day winning streak. Sensex down 288 points. Nifty falls 74 points. Indices dragged down by Reliance, which fell 1.5% on disappointing earnings. PSU Banks up more than 3%. FSN E-Commerce, the parent company of Nykaa, falls to an all-time low of 1,110 rupee on the NSE, lower than its issue price of 1,125 rupees. Another blow for Google in India. Competition Commission imposes a second penalty of 936 crore on the tech giant, finds Google guilty of abusing its market position to push its payments app. Takes the total penalty amount to 2,274 crore rupees. WhatsApp crashes for more than 90 minutes. Problems reported from around the world. Cause of the mega outage is still unclear. No honeymoon period for Rishi Sunak, who will have to hit the ground running. Business Today TV identifies the biggest economic challenges for the new British Prime Minister. Cosmetics giant L'Oreal taken to court in the US. Plaintiff alleges its hair straightening chemicals are linked to her cancer. Domestic benchmarks ended lower after a lackluster session today. Investors chose to take home some profits after gains in the past 7 sessions. Both the Nifty and Sensex notched over 4% in the last 7 sessions, giving investors leeway to book some profit today. Nifty fell 74 points, while the Sensex ended 288 points down. The gainers were led by Tech Mahindra, Maruti Suzuki, JSW Steel, L&T and Eicher Motors. Among the big losers on the Nifty, Nestle India, HUL, Kotak Mahindra Bank, Bajaj Finserv and Britannia. For a deeper look into the play on D Street today, we have G. Chokalingam, founder of Economics Research, with us. Mr. Chokalingam, what do you feel are the hits and misses of the last Samvat among some of the names that you've also been recommending over the past year? Where perhaps did you see positive returns and where were the negative surprises?
Yes, I mean, it's a mix of both a good performance and a little underperformance. I would strongly, I've been recommending Sun TV. If you look at the Sun TV balance sheet, enormous cash is there. And IPL, the new IPLs are valued at around 7,000 crore. Industry values Sun TV IPL at around 6,000 crore. So if you consider valuation of IPL and plus the free cash, the core business is trading at only around 5 PE. So that's one stock we have been strongly recommending. In another stock in the small and mid-cap space is Powai Medical. This is extremely attractive hospital stock. Either you take a large hospital like Apollo Hospital or small hospitals from Hyderabad which are recently listed. They are all trading at anywhere from 3 crore rupees to 8 crore per bed. Enterprise value per bed ranges from rupees 3 crore to 8 crore. Whereas Powai Medical is available at just rupees 1 crore per bed. Apart from that, it has got solid, foray into MBBS medical education. And the rarely, listed companies have the license to operate medical institutions. There are only 1 or 2 in the country. So therefore, this stock also we like a lot. As far as large cap is concerned, I would say that one can look at, HDFC Bank. It has been underperforming, but I'm pretty confident that it will do extremely well because despite a huge base, they have been doing well on credit growth and maintaining the asset quality. Second, Reliance Industry. In fact, I have been positioning Reliance Industry as a Reliance economy. I believe Reliance Industry would emerge as a mini economy within 4 years, after having a successful foray into oil and gas, chemicals, then retail and then mobile. Now they are getting into renewable energy and, fintech, and there are so many new initiatives. And they already proven their capability to build the volume of business wherever they entered. So I believe that this would emerge as a mini economy in 4 to 5 years, and market would, discount that in next 3 to 4 years. And I am giving, in fact, doubling of the stock price in about 4 years' time. So these are the four stocks, I have high conviction without any doubt.
Mr. Chokalingam, what about PSU Banks? What's on your list from the financials when it comes to the PSU basket? We saw SBI really pull up the index today, and a whole host of them, in fact, have been looking good in terms of gains of late.
I've been last 1 year recommending Bank of Maharashtra. It is surprising that market has not properly valued Bank of Maharashtra. If you look at credit growth, deposit growth, net NPA percentage, or the share of low-cost deposit in total deposit, that is CASA deposit, it's really amazing. It stands out the best among the PSU banks. I've been tracking banking sector for about nearly 3 decades. I have not seen any PSU bank like Bank of Maharashtra, emerging in terms of these parameters, not in terms of size, but in terms of these parameters, emerging as a mini HDFC bank. So this bank is just trading at around one-time book value. I believe compared to, there are many small finance companies which are converted into bank and trading at 2 to 3 times. This bank deserves minimum 2 times valuation. It's amazing. It's also dividend paying. So this is the one stock, Bank of Maharashtra, I believe, within the PSU space is the best bank. It's promising to create wealth in the next 1 to 2 years.
All right, Mr. Chokalingam, do share with our viewers also what's going on with the IT pack. Sure, returns plummeted at the end of the year, but some mid-cap IT stocks today surging in trade. We've also got, the likes of a Tech Mahindra up 3%, lots of buy calls and an HCL Tech. Are valuations starting to look better at these levels?
They enjoyed super rich valuations before the meltdown. Some of the mid-sized IT companies have reached even 40, 50 PE, and large companies had a 30, 35 PE. And, it was overvalued, but then the market punished them beyond what they deserve because of what's happening in NASDAQ. NASDAQ, all of us know how the technology stocks got butchered. And second, to be fair, the fundamentals also shrank on the domestic front because of employee cost. So many of these companies have seen 50-60% year-on-year rise in the employee cost. If you ask me, I think it has bottomed out. IT sector stocks have bottomed out. This is I may be wrong, but I believe firmly that this is the ideal time to pick up IT stocks. Why I'm saying is that, the rupee has fallen more than 10% in the last 1 year. Of course, all over the world, the currency depreciation is not helping on export front. The vendors have become smart, but still, the employee cost, they will be able to pass on to some extent, to a large extent, with the benefit of rupee depreciation. And secondly, if you look at the industry, whether you take a top tier, 6-7 companies or bottom of mid segment of companies like LTI, many other emphasis, Persistent, the whole industry is dominated by a handful of companies. If you take overall 10 companies, top 10, I'm sure they would account for almost 80% of the total IT exports. What I'm trying to say is that it's such a concentrated industry, would be definitely be able to pass on the employee cost, and also they will be able to control the attrition rate and able to control the aspirations of the IT employees to their benefits. And secondly, the valuations have come down a lot. So therefore, in fact, we have been recommending Oracle Financial Software in the small cap Gensa Technology. Gensa Technology has fallen nearly 60% from the peak, and it has got the digital platform, which is 70% of the total business, which is one of the highest in the industry, and also cash-rich company, and trades at a very cheap. And similarly, Oracle Finance, again, close to 52-week low now. Interestingly, it's a subsidiary of 40 billion US MNC, and trading at a 2-year low, and it gives you 6% dividend yield if you go by the last year what dividend they have given. And the cheapest technology stock in the country trades at around 11-12 PE. And even in the last 10 years, couple of times the Oracle Finance got beaten down badly. It did reward the investors with a phenomenal return. And also very interesting, this is a product company. The product company particularly for maintenance charges, they have some cushion to get the benefit of the rupee depreciation from the vendors. So that's my understanding. So therefore, these are the two stocks I believe possibly can even create a wealth in the next 1 to 2 years because they are at 2-year low.
Great, Mr. Jokhalingam. Thanks for joining us and taking us through some of your picks, including from the broader markets. Asian Paints, which announced its quarterly results last Thursday, is foraying into new business verticals with an entry into the white cement market. The paints major has also invested 21 billion rupees into a new plant to manufacture emulsions and monomers. My colleague Sakshi Batra spoke with Amit Singhal, the MD and CEO at the company, about future plans.
On the price hikes front, since you've already taken, both these quarters, is that going to continue the trend, in the second half as well? And if you could also help us with the quantum of price hike that we could expect.
Okay, so I don't think so. We are looking at really burdening the customer as a leader going forward. We need to kind of really balance the prices because we've already taken last year a huge increase of about 20% in terms of price increases, almost to that extent. So I think going forward, given the softening in prices, the deflation which we are seeing, we are not kind of looking at any price hikes as of now to that extent. And we think that today the deflation, the raw material prices coming down would take care of the overall gross margins in terms of overall going forward. So I think the gross contribution would definitely kind of improve as we go forward.
What about the impact of inflation and the depreciating rupee? Will that have any sizable impact on demand, or will it be just, non-mentionable?
So as I said that, there is a deflationary trend in terms of the raw material prices we are seeing. So we are not expecting inflation really coming in Q3, and the past effect of inflation would possibly not be there in Q3 to that extent. So yes, I think the depreciating rupee can a little bit spoil the party overall in terms of going ahead as we see it. But I think inflation is a bigger piece in terms of which I think is going to be dealt strongly as far as Q3 is concerned. And with that as a background, I think it should not kind of come in the way of the demand because market will not see any price increases if the deflation is in terms of what we are thinking happens in the market.
So domestically, you continue to be a dominant player right there. I wanted to understand in terms of market share, despite, big companies like Grasim announcing their plans to enter into the paint business. How are things going to be, changing right there? And do you expect to sustain your market share?
See, overall, I've been giving this commentary for some time now. Okay, I don't think so. We need to get obsessed about any player entering the market and so on and so forth. This is a phenomena which we have been seeing for the last 2 decades. We have seen international players with very, very deep pockets entering the Indian market and really kind of splurging money in the overall market to that extent. We see that Asian Paints today has a very, very strong brand equity in the market. We also have a very strong supply chain and a distribution efficiency in terms of what we bring onto the table. More than that, we have strong innovation and technological platforms in terms of which gives us differentiated products in the market to that extent. And given this kind of a thing, we really think we are not really bothered about anyone coming and entering this market overall to that extent. And what we see very clearly is that today the market is about 65,000 crores today. In another 2 years, 3 years time, this market will go to about 75,000 crores. And if there is a new player which is even doing a business of about 2,000, 3,000 crores, it will be less than 4% of the share of the total market. So you can very well imagine for yourself if that player really makes a difference in the market to any of the players who are coexisting and are strong in this market today.
All right, let's take a very quick break on that note. Back with more on the other side. Welcome back. The Volkswagen Group, which comprises Skoda as well, has marked a remarkable turnaround in India. The brands earlier had sales of less than 1,000 units a month. Now, on the back of a slew of SUVs launched by the two companies, sales are up again. Business Today TV's Chetan Bhutani caught up with Ashish Gupta, brand director at Volkswagen India, just before Diwali.
I can't think of any other brand which has turned their portfolio so far around in such a short time. You know, just to give you an example, we were earlier present with the Polo, Vento and the Aimio, and the average ticket size of our portfolio was 6 to 8 lakhs. And within 1 year, we have actually turned around our entire portfolio with these 3 new cars, and our average ticket size has gone up to 15 to 18 lakhs. So this is a massive transformation for any brand, because why I'm saying ticket size is because it means a change in how you present your brand to the customers, because it also means a change in the type of customers who are buying your cars. What has also happened over the last, I would say, 6 to 8 years is the expectations and aspirations of Indian customers have also grown. SUVs have become a kind of a talking point not only in India but world over. There's a clear shift in buying patterns towards SUVs. So customers naturally expected Volkswagen to also evolve with a period of time and bring in products from our latest global portfolio on the latest platform with the latest features, but maintaining the core DNA of safety, build quality and fun to drive. Right. That's what we have managed to deliver, and I think it's been very well received by customers.
Can you give us some numbers there?
Yeah, I think if we see this year itself, till September, the market is up almost 18% compared to last year. When we started in January of this year, the expectation was that the Indian market, car market would be around 35 lakhs. This forecast has already been revised to close to 37 to 38 lakhs. So definitely market is performing much better than everybody anticipated. And for the last 1 year, actually, the market has been held back by supply constraints. So this reflection is definitely there in the festive season as well. We see good footfalls happening in our showrooms, and we have also ambitious plans for the festive season. We plan to sell an average of 4,500 to 5,000 cars a month during this quarter, which should be our best quarter in the country for a long time. And I'm quite hopeful, and with the kind of traction we have in our showrooms, we seem to be on track.
That's a really good number you've mentioned here. About 4 to 5,000 vehicles in a month is like a good sales number. Yeah. Also, Ashish, tell us about how the Indian market is looking as far as the semiconductor shortages goes, because it has eased, yes, but the supply chain constraints due to the global economical factors have absolutely little bit troubled the industry as well. So give us a sense as to how Volkswagen has really impacted its operations.
We were heavily impacted. If you look at Q3, especially June, July, August, was a really bad period for us. We had almost 50% shortages compared to what the demand was. And not only for us in India, we are part of a large brand globally. We are present in 160 countries, so any shortages worldwide have a share for us in India as well. So June, July, August, as I said, was a difficult period where we could meet only 50% of the demand. But knowing that September to December is the high period for India, we have made sure that there are adequate supplies available, and I can assure customers that for this quarter we have absolutely the cars that you want.
The United Kingdom now has an Indian origin Prime Minister, but Rishi Sunak will have no honeymoon period. The former Chancellor of the Exchequer will have to hit the ground running. Sunak has the task clearly cut out for him, saving Britain's economy.
Rishi Sunak is a man in a hurry, already an experienced hand in steering the Great Britannia through troubled waters. He now has the spotlight on him, being watched closely by billions across the world on how he will restore United Kingdom's battered financial credibility. Minutes after being anointed the Prime Minister of Britain, Sunak spelled out his priorities in his own words from outside the much-recognized door of 10 Downing Street, London.
The United Kingdom is a great country, but there is no doubt we face a profound economic challenge. We now need stability and unity, and I will make it my utmost priority to bring our party and our country together. I pledge that I will serve you with integrity and humility, and I will work day in, day out to deliver for the British people.
At 42, Rishi Sunak is the youngest British Prime Minister in modern history. He is also the third Prime Minister in as many months. The first fell prey to economic exigencies, the second to economic blunders. It's now upon Sunak to face the triple economic nightmare of record high inflation, rising interest rates and recessionary trends. As the former Chancellor of the Exchequer, he spent heavily to shield households and businesses from the economic ravages of COVID pandemic. As Prime Minister, he will have to swallow the bitter pill of spending cuts. His predecessor announced a huge tax cut, leaving a gaping hole in British finances. Sunak will likely be forced to raise taxes to balance the government's budget. His biggest priority, how to support households facing an exponential rise in energy and food prices. Inflation hit 10.1% in September, a 40-year high. The British government has already spent billions in freezing household energy bills, money it will have to borrow even as interest rates rise. Some of this burden will have to be passed on to taxpayers. Home loans, EMIs in Britain have shot up as well, tripling the burden on homeowners. The Consumer Confidence Index also has fallen to the lowest point since its inception in 2011. It was the fifth consecutive quarterly decline.
Every move of his will be minutely scrutinized. He is the first British Prime Minister of colour and belongs to a party that could not give the country a stable government they deserve. Therefore, in and out of the political circles, there will be critics that will look at every opportunity to bring him down and out of 10 Downing Street. I'm bringing it today from Westminster, London.
In what could open a Pandora's box for global giants manufacturing personal care items, a lawsuit has been filed against L'Oreal in the US, with the plaintiff alleging that its hair straighteners have caused her uterine cancer. Also named in the lawsuit are two brands owned by Godrej Consumer Products and Dabur International.
We're going to file the cases as they're needed.
It's one of the biggest cases against cosmetics manufacturers filed in the US. L'Oreal, along with several other companies, have been sued over claims that its chemical hair straightening products caused uterine cancer among women. The lawsuit, filed in the Chicago Federal Court, comes days after a study from the US. National Institute of Environmental Health Safety found that hair straightening products may significantly increase the rise of uterine cancer among frequent users.
Many of the women who use these chemical relaxers are women of color, and many of them use these chemical relaxers because of society pressures, but also because of the marketing from these corporations that should have known the harmful effect that these chemicals were having on their customers.
Importantly, according to reports, among the companies sued are two other cosmetic brands, Just For Me and Namaste Laboratories. Not as well known in India, Just For Me is a brand owned by Godrej Consumer Products. Namaste Labs is owned by Dabur International. The plaintiff, Jennifer Mitchell, said she was diagnosed with uterine cancer in 2018 after using L'Oreal's products since about 2000, when she was 10. She is asking the court to order L'Oreal to pay unspecified money damages and to pay for medical monitoring.
During that appointment, when he was doing the ultrasound, he saw something. That day he had to do a biopsy because he saw something in my uterine lining. I'm 28 years old and I was just diagnosed with uterine cancer.
The study data showed the association between hair straightening products and uterine cancer cases was most pronounced for black women, who made up only 7.4% of the study participants, but 59.9% of those who reported ever using straighteners. Bureau Report, Business Today Television.
That's how we leave it on the show tonight. Thanks so much for watching.